What's going on, guys? Back here again with another video. So for today, what I'm going to be doing over is I'm going to actually be going over just a whole bunch of stocks. Alright, now they're going to be all related to the one sector that which I'm always telling you guys to trade, to invest in, because it's super volatile. With Biden coming in, there's going to be great plans for the oil sector. So I'm going to be just listing down 6 stocks. I got them put up over here. I got the graphs put up. There's some technical analysis involved with some of them simply because of the fact that there needs to be with some, there isn't. And at the end, I'm going to explain why all of these are great picks, the reason for why you need to pick these certain ones, the amount that you need to allocate to a certain position, why certain ones are a lot more volatile. So let's get started, alright? First of all, we need to thank President Biden, alright, for all these great oil picks. I'm going to list off why we need to get into oil in the end, but let's start off, alright? USO, alright? I've already mentioned to you guys USO. In fact, my first ever video, it's all about USO, alright? Make sure to watch it so that way you guys know what this is all about. But so far, we're in this rally sort of mode, alright, for this previous week, ever since Friday or so. Now this week, it's going to be rally mode all time soon, alright? So right now, if you just want to like look at it and you want to like see if you want to build a position, because you do need to build a position in oil, guys, and I will list that off at the end. But if you do want to build a position, just wait a little while, wait for it to consolidate, alright? But on the bigger picture, because right now we're focused on the bigger picture, because again, these 6 stocks, they are going to be investment, guys, alright? You can trade them all you want. Well, I mean, I'm not sure about like say like some of the bigger stocks I'm going to mention, but something like USO, you can do options on it. You can like trade this weekly, all that type of stuff. But again, you want to build a position on this to invest in for the greater long term. Alright, right now it's at, what is that, $38, $39. Alright, it's basically $40. It still got room to grow at 58, and then we have this great gap over here at 70. Alright. Again, I made a video about this around 2 or 3 months ago where I was predicting that I don't know whether this gap is going to get truly filled up or not. Right now, the fact that Biden is president and at the stuff that I'm about to list off at the end, this is hugely probable and it is going to happen. But again, it's not investment advice. You need to do your own DD at the end. But let's move on to UCO, alright? Now what UCO is, it's essentially USO, but a lot more volatile, alright? It's like a double weighted oil ETF. All that really truly means is that it tracks oil to a greater extent. For example, when oil moves, USO, it's gonna move say like this much, but UCO, okay, UCO, okay, goddamn, but UCO, it's gonna move all the way up, alright? Like, do you guys see what I'm trying to say? So for that reason, when you guys do build a position into UCO, make sure that it is gonna be a lot less than USO, alright? Because this is going to be moving up and down a lot, and again, it's got the same sort of gap to fill, but it's at 155. But the thing is, it's going to have a lot of ups and down that way, so be prepared for that. And to, you know, mitigate that risk, just have a small position size so that when oil does move in the wrong direction, you don't get, you know, like, it's like it doesn't like hurt you that much, right? Now next up, guys, these are going to be our actual gas station companies. Alright, this is where our domestic profits are basically going to be coming from. I mean, all of these companies, they are basically domestic, but truly the profit, this is what the main catalyst is going to be all about. Alright, so the first company is ExxonMobil, ticker symbol XOM. So you already have seen an Exxon gas station probably, right? Now the thing is, Exxon, this is a gas station which tends to be in the middle class, upper middle class type of neighborhood, alright? You aren't going to be seeing a lot of Exxons in the poorer areas a lot, and for that reason, it's simply going to be a great buy, alright? You can say that, hey, well, poor people, like, they can't afford that much as gas, like, they aren't going to be spending that much, and actually, like, there's a very good reason for why that is the, like, why you should be buying oil. I'm going to explain that in a bit compared to the other stock that we're going to talk about. But for right now, for Exxon, if you look at it, it's got great room to get back to our $70. It still hasn't reached halfway to its recovery point and growth, alright? If we just look at back where it's at, look at that, guys. Peaks of $100, peaks of $100. Now with Biden being president, you all know that he wants to cut out domestic oil production. What does that mean? Our domestic oil suppliers, they're going to have less gas to give to our people that need it in America. This could possibly include contracts with, say, Exxon. You know, look into that, guys. Do the research about that, all right? That means that there's less supply, there's still going to be demand, and in fact demand is going to rise because restrictions are being lifted, and this is the price of these companies already. So once they announce their future earnings, oh wow, like people are working back again. That's why, guys, that's why this is a great buy. Now next up we have Chevron. Alright, now Chevron, this is like the baby boomer, this is your middle-aged investment type of stock. Alright, it's just like Exxon, but it's just overvalued. Now I don't know whether it's truly overvalued. Alright, to me, like, it just costs a lot. Alright, $90 compared to Exxon, and Exxon has a lot more room. Now if you look at Chevron over here, it's already around $90. It's starting to consolidate a little bit. Maybe a breakout pattern going to happen pre-time some sort of soon, I'm guessing. I haven't done analysis on the short term on this, but again, we are looking for the bigger picture, trying to invest in this video. So again, we have $109 mark to look out for in the very near future. Then after that, highs of 120, and after that, it's going to be all the way going up. All right. Now next up, we have Marathon Petroleum. All right, guys, Marathon Petroleum, this is just like Exxon, but for poor people. All right. Now I know it sounds really weird to say that, or you could say that, is that, what do you mean by that? Alright, like some of you may actually be curious. Alright, so what do I mean by that? Okay, so if you look at location, location is super important for all these gas station type of stocks. So if you know about anything about banks, alright, banks are located by the income. Alright, a Bank of America is not going to go into a poor neighborhood. Alright, there's simply not enough money to be made there. A payday loan, a mortgage lender, those type of institutions, they're going to go into those poor places because they can make money off of those, because they don't need to have as much capital readily available there. All right, like that's the reason why a bank, for example, a big bank, it's not going to go into a poor neighborhood. There isn't enough capital there for it to sustain itself, to give out enough loans. That's why businesses can't start in poor neighborhoods. Is basically economics 101. Now in the case of this, if you're a company, say like Exxon, and where your gas, or say something like BP, where your gas is like $3.20 on a regular, guys, right now I'm paying around $3.15 for gas. All right, I live in a pretty good type of neighborhood. These people, and wherever they live at, they can't afford that. All right, they need their $2.40 of gas. They need their $2.30 of gas. So this is where Marathon Petroleum Pete is going to come into play over here. So I've got like the supports and resistances laid out. I mean, it's kind of awkward for this type of stock, simply because the fact is that this particular sector has had a lot more recovery. And by sector, I just mean inside of the oil sector. This particular stock, Marathon Petroleum and MRO, as compared to all other oil type of stocks, they have led the way, guys, meaning that they have recovered the most compared to everybody. If you just look at the graph, already almost reaching back to its pre-pandemic highs. All right, guys, that is a great sign for more growth that can happen. Now mind you, what that does mean is that it has already had a lot of its growth already done, and oil, there is, obviously we know that it is going to go up. Domestic oil production, it's going to go down, meaning that OPEC, other countries like Saudi Arabia, they can boost the oil production of their own because they have a lot more power now. They can charge more oil to us. Russia is a big key player as well because they like to mess with Saudi Arabia. They can mess with America back. All sorts of things at play. But the main thing at the end is going to be how high can oil go, because we know that domestic oil production is going to cut down. We have seen the daily charts of historic oil. In fact, I'm going to put up that chart after we look at MRO. But let's look at MRO, guys. So I've talked about MRO every single month so far. All right, look at all of these stuff. These line supports, resistances, whatever you want to call it. We don't even need to look at this because of how great oil is. Okay, so as you can see, we have I previously talked to you guys about how the 950 was going to be shattered. It is about to be shattered this week, it looks like. After that, it's going to be the $10 range. And then we have over here this 12 type of thing. Okay, $12, I'm guessing. So again, compared to the companies like Exxon, where it can go from $50 all the way to 90 in 3 years, I don't know about Marathon Oil, all right? But it does have dividends. All right, look into the dividends that Marathon Oil has. I think it's 0.21 or something maybe, but they did increase their, all right, so they've increased their dividends. Alright guys, so I got the old chart put up over here. We're just going to be looking at just one tiny little historical key aspect of it and why it is so important for Biden. Now before I do that, I just want to mention one more catalyst for oil, and it relates back to Marathon Petroleum, alright? Now, I mentioned how the poor people, their oil prices, they're going to be a lot different, and why it's so important that we diversify our portfolio in the oil sector. Just because of the fact that, you know, like, you can't just buy into oil. If you buy into oil refineries and production shuts down, well, those profits are gone, alright? If you buy into just gas stations, well, in a certain state, if something happens, regulations, if like a certain state is on lockdown, they have more restrictions, there's, you know, like, all this type of stuff is at play, guys. But the one thing that I want to mention is that if we look at the way that the economy is headed, and if we realize about what happened in the past, you know, it's always the poor people that get affected by everything the most. And basically what I'm seeing is that a lot of people, they're doing a lot of service type of jobs, alright? And this is essentially, could be Uber Eats, Grubhubs, Uber, literally Lyft, alright? These service type of jobs, alright? I'm seeing this I'm seeing this in the comments, I'm seeing it throughout, literally, like, people just saying, like, bro, I walked into my barbershop and this guy was talking about, oh yeah, like, I'm working part-time as an Uber. I'm like, damn. And it's like, I get it that there's obviously a certain part of the population, but it's just that you're hearing about it a lot more. And the fact that I'm hearing it in my area, guys, again, like I said, that gas prices in my area are $3.10. That should let you know something. All right, people in my area where gas is $3.10, people have to work as an Uber, all right? Now the thing is, like, it's like he obviously stated that, oh yeah, like, I lost my job during this type of thing, alright? So it's not just the fact that he's doing it for fun, alright? Some people, like, they may be doing it for fun, but no, a lot of the poor people in the poorer areas, they're gonna have to do this as their actual job, and they're gonna fill it up with gas. It's gonna drive it up higher in terms of profits, alright? Now the final thing that I wanted to examine was the historical aspect of the last time when oil was going down. Now this is sort of like what President Trump did, alright? Now in 1976 or late 1970s, that's when we had Jimmy Carter as president, guys. He was a really nice farmer type of guy, super into globalization. Again, this was really not a good thing. Oil boom boom all the way up. Now as soon as Ronald Reagan became president, we had a lot more regulations, or sorry, a lot less regulations. In fact, we could control our price of our own oil back then. And this essentially meant that all the OPEC countries, Saudi Arabia, Venezuela, in fact, like, that's something that which relates to why Venezuela is in the state that it is today. But all this type of stuff caused the price of oil to fall, and in this sense, that was great for us because the oil was cheaper for us. But what's going to be happening is the opposite thing now, alright? We're essentially going to have a super nice president that's going to be like, hey, let's get oil from all these other countries. Meanwhile, we produce just a little bit, you know, we're still going to be producing, but, you know, we want to get the Green New Deal rolling. Alright, we got to get with the program. That's essentially what's happening, guys. But that doesn't mean that oil is going to go away, alright? The ships that those parts are going to be coming out on, what's that powered by, huh? Is it like the wind, God, or something? No, it's oil, alright? Those solar panels, or not those solar panels, those wind things that spin around, wind turbines, what's that powered by? Alright, like, look into that. Oil is going to be around for a really long time. In 20 years, oil is still going to be here, alright? Which one of your friends is, like, looking to buy a new electrical vehicle car right now, alright? Do most of y'all have the money for that right now? Now, that doesn't mean that the green energy sector, that isn't a good buy long term, alright? I'm not saying that. But I'm just saying, look into oil, alright? And hopefully you guys, you know, again, mitigate your own risk, look into what to buy a lot more of, say, USO than UCO, buy a lot more Marathon Petroleum than you would, say, Chevron, I guess. Again, not financial advice, but yeah, I will see you guys next time.